Will the hotels ever be the same again? When everyone is talking about the airlines and the cruise ships, hotels across the world are completely empty. Are they all doomed, or will some survive and then maybe dominate the industry? Let's go take a look. If you're new to my channel, welcome. My videos are all about investments that anyone in the world can make. And today, together, we're going to investigate the giant hotel industry. See, what I'm really trying to do is help investors make better decisions about what they invest in the stock market, because people all the time tell them to invest in the stock market, but they don't really know what it is they're actually buying. So I'm going to take a good hard look under the covers of the company to make sure we're not buying some dirty mattress. So I bet a lot of people have bought airline shares thinking the price is just going to bounce back, but what about the hotel industry? Where is the love? When people start traveling again and the world goes back to some sort of normality, it'll be interesting to see what happens with the hotels. My initial thought is that holiday travel, well, it'll eventually recover. And I think that hotels based in like holiday destinations will definitely get back on their feet. I have no idea when, but I think these types of places will offer some really good deals for people to start traveling again and start going to these destinations. So for those of you looking for a cheap holiday to say Italy, well, it might be an amazing opportunity to get a great deal. Now, although I think holiday travel will be okay in the medium term, I'm not really sure about business travel. Actually, I would assume business travel is going to be less. So I think hotels that rely mostly on business travelers, well, I think they might seriously have to change. These are all just my thoughts, and I think a lot of people are going to have far different opinions than mine, which I think is actually pretty fun to try to predict what the future of the industry is going to look like. So I think business travel is going to decrease significantly because a lot of people have had a taste of working from home and conducting meetings online. And this was obviously necessary for the past few months, but I think businesses have caught on to that it's a lot more efficient and a lot cheaper to keep their employees working from home. So to save some money, maybe these businesses don't need to have these expensive corporate offices anymore or this expensive business travel. But maybe I'm totally wrong because the stats tell me that business travel is far more important than I originally thought. So check out these statistics from 2019. A lot of employees would accept lower pay for more travel. 90% of employees think travel is essential. Nearly 40% of Gen Zers, which are people under the age of 25, they want travel with work. And face-to-face meetings are far more powerful. But these stats were prior to 2020. And because of the forced change, I'm not sure whether these statistics would hold up anymore. See, a lot of like old school traditional businesses would have been very resistant to the change of their workforce working from home and doing meetings remotely. But because it's been forced onto their workforce, then I think that's made people adapt a lot quicker. And these big businesses don't really have a choice. They had to do it. And I think they're going to see some benefits. A lot of smaller, more agile businesses were doing this already. But now that the big traditional businesses have had to do it as well, maybe that changes everything. Or on the other side of the argument, maybe businesses find out how important those face-to-face meetings were to growing their business. So maybe this business travel actually will grow fast again. But it is all very unclear. And I think if business travel is a little less necessary than it was, well, the hotels that relied on business travelers, well, they're probably going to suffer. On average, 40% of hotel customers are business travelers. And these are the hotels that are the most popular amongst these business travelers: the Marriott, Holiday Inn, the Hilton, DoubleTree, and Hyatt. And another interesting trend that was starting to develop pre-crisis was that there's over 1 million business travelers now using Airbnb. And this is actually growing a lot faster than the industry. So that tells us that Airbnb is actually taking a lot of market share away from the hotels. So right now there are a lot of very serious challenges facing the big hotels. Now, before I get into the financials of some of the big hotels, I'm going to have to make a few assumptions. I assume the most recent financials are going to look very ugly. Most likely there will be losses, which totally makes sense. And just because there are serious issues in the industry doesn't mean it is totally uninvestable. For example, if all the assets of the hotel were added up and I could buy shares in the company at far less than the assets are actually worth, then it might not be a bad idea. I mean, for example, if the assets are worth $100 and I could buy them for say $40, well, it doesn't really matter how much money the business is making. I'm getting a deal. But if this is the case, I really want to make sure my shares won't be diluted in the future. So I'll need to make sure they can handle their debt. If they cannot handle their debt, the hotels might need to actually raise more money by issuing more shares, which will then dilute my return on investment. So even if I can see a really good deal here, I want to make sure that I don't get my shares diluted in the future because that would be far worse. So let's go take a look and sit back and relax and don't worry about the terminology, just get a feel for what I'm doing. Today we're going to go through the Hyatt, the Hilton, and the Marriott because they're the big three with an international presence. Now I know there are many other hotel chains, but these three have very recognizable brands and have the biggest asset bases. So can they handle their debt? Firstly, I'm going to look at the Hilton. Now, besides noticing that there is no consistency here, I found something very troubling. At the end of 2019, before the current problems, I see that the current assets are at $2.1 billion, whereas their current liabilities are $2.9 billion. So they actually owe more short-term debt than they can afford by about $0.8 billion. So then I went and looked at how much cash they have on hand, and they have $0.6 billion. So they really don't have enough money to pay off their current debts. Now, it's probably not a big deal for the Hilton to go out and raise money by mortgaging some of their properties. They have a lot of properties, so it's probably going to be relatively easy to get that extra $200 million from somewhere. But all of this data is actually before the current crisis. See, right now, the revenues are actually down over 90% for the current quarter. Over 90%. So I believe this debt problem that they have is actually a really major issue, and they're going to have to raise a lot of money. So the chances of the Hilton diluting their shareholders is, I think, very high, because they're going to have to take on a lot more debt, which I actually think will also cripple them for a long period of time. And I don't think we're going to see any cash flow from this business anytime soon either. Look, maybe they can dig themselves out of this problem, but I can't see us getting any return on investment anytime soon. I'm actually concerned the company is in trouble, so this is a big red flag. Okay, now let's go look at the Hyatt. So although the debt to equity is going in the wrong direction, at least the Hyatt can handle its current liabilities. They have $1.7 billion in current assets and $1.1 billion in current liabilities. I'm sure they're going to be hit extremely hard, just like the Hilton, and it's going to be a big test, but they're in a far better position than the Hilton. Their debt to equity is trending in the wrong direction. Now, this isn't a good sign leading up to the crisis. They will most likely need to raise some money, but at least they have room for this, unlike the Hilton. Now we'll go check on the Marriott. Okay, so no consistency here either, and check this out. The Marriott is about to fall into negative equity, and debt is getting bigger and bigger. Also, the current assets are at $3.1 billion and current liabilities are at $6.7 billion. That means they're going to have to find from somewhere $3.6 billion in the short term just to pay their debts. But they only have $0.2 billion in cash. So like the Hilton, they're going to have to find some money from somewhere, and the Marriott has to find a lot more. They have to find nearly $3 billion. So they're probably going to have to borrow a lot of money, dilute their shareholders, and probably sell off some assets. We won't see any return on our investment if we give our money to the Marriott. Okay, so normally I would move on to the growth of the companies and the management of the companies, but I don't know whether we even have to do that, but we will do it for the Hyatt. See, even if growth is okay for the Marriott and the Hilton, they're going to dilute their shareholders, and they're going to have to do something about their current debts. See, even if I could buy all of the Marriott or all of the Hilton's assets, and then I sold off all those assets, their liabilities are so big that I would still owe money. The only way I can see people investing in these companies is if they're very confident that some good news is going to come out and the share price is going to go up, and then they're going to sell at that point, because they're only going to be speculating, and the fundamentals of these two businesses are not good. Oh, and I'm definitely not going to speculate on this mess. And I hope for their employees' sake that they can dig themselves out. But I'm not going to be putting money into this black hole. But let's move on with the Hyatt, because they're better than the Hilton and the Marriott. And now, although earnings per share is growing nicely, operating cash hasn't been growing at all. It's very hard to predict the future of the cash flow. The future earnings for Hyatt from the analysis is positive. Now, this is interesting because the previous 5 years, the Hyatt has been growing earnings at about 20%. So I can see why the analysts think it could keep growing after the crisis like this. But I think this is an actual optical illusion. See, earnings are growing, but revenue isn't, which means they're not actually growing. All they're doing is probably cutting some costs or selling off some assets to improve their earnings, because revenue is flat. So it is a bit deceiving if we just looked at the earnings growth. Now, this is a very important thing to find. That's why I needed to look at both the cash from operating activities and the earnings per share together. So this is a really good example why we don't want to be fooled by what the analysts are predicting. See, earnings are growing, but revenue isn't. So the business really isn't growing very well. Okay, I think we should just stop now. There's no real point going on any further. Okay, just for interest's sake, let's just go see if their share price is severely undervalued. Okay, so here's the calculator, and here are the numbers that I used. So for the growth rate, I've used 3% for the first 5 years, and I've actually used 3% for the whole 10-year period. That's pretty generous, I think. So my ROI goal is 20%. Now I actually really want 15%, but it gives me a margin of safety. The multiple we could sell it for after 10 years is 12. Probably could go lower than that, but let's just keep it at 12 for now. The operating cash flow minus maintenance capex is 175 million, and the shares outstanding was 105 million. Now that gives us a price that it would be a reasonable deal to buy at, would be $11.89. Now the share price is nowhere near that right now. And I don't even need to worry about, I've done a second buy point here, but there's really no need to go into this much detail. So is the Hilton, the Marriott, or the Hyatt a good investment? I hope you enjoyed that analysis. It's not always going to be blue skies and rainbows, and I'm probably going to deny a lot more companies than I ever approve. So to summarize, the Hyatt is better positioned than both the Hilton and the Marriott, but it's not a good investment for us long-term investors. We'll find some great companies that will be far better investments. Remember, if you want that spreadsheet that I use to find the value of the Hyatt, you can download it in the link below. So stay tuned for more videos of mine where I can hopefully uncover a hidden gem or two. Hit subscribe if you enjoyed that analysis, and I will see you in the next video.